All righty. Well, hello, you early birds that are here immediately when the webinar starts. Welcome. My name is Luke Robinson, and I'm a business advisor here at Collective, your all-in-one financial solution for your business. And we have a webinar today. And let me, oops. One moment, sorry about that. Let me fix my slideshow here. Okay. Whoops. Apologies, guys. Give me one moment. Okay, here we go. So, welcome everyone. Like I said earlier, my name is Luke Robinson, and I'm a new business advisor here at Collective. And we have a webinar today that will illuminate all the secrets of S Corps and how they work and what's going on. And before I get started here, I'll give a few minutes to let some people trickle in. But also, let me just kind of give out some, simple housekeeping rules here. First off, if you have any questions, because at the end of this presentation, we will have a Q&A section to where you can answer any questions you'd like about taxes or about S Corps, and I'll do my best to answer them. And for those questions throughout the presentation, please put them specifically in the Q&A box. That's more for tax questions for me to answer. For the chat box, put logistical questions in there. Like if you have problems, if there are some audio problems, some visual problems, anything like that, put those types of questions in the chat box, please. That way we can kind of keep it organized and I know, which questions to answer. And also, by watching this webinar, you get sweet, sweet discounts with Collective. So at the end, there will be a discount code, and it should give you your first month half off of your membership with Collective. So that's exciting, of course. And then please join our webinar groups that's happening on LinkedIn. If you don't mind, share a screenshot of this, share a post on your social media pages. We would love to talk to your friends and family about S Corps, about what we're doing. And then also too, the webinar replay will be sent out 24 hours after this webinar is done, and it'll be sent to your email. So don't worry if you don't catch every minute of this presentation. You will get a copy via email. And then please, for any webinar related inquiries, any questions, send that to webinars@collective.com if you have any questions like that. And then also, we have an affiliate program with Collective too. So, obviously, we hope to welcome you as a member, but let's say that you're just here for some information. You know a lot of people that could benefit from Collective service. We would encourage you to sign up as an affiliate. And for more information about that, you can email affiliates@collective.com. And we'd love to have a conversation with you. But I think that we can go ahead and get started since we got all the logistical stuff out of the way. And like I said, this webinar is about an S Corp, about self-employment in general, about taxes in general, about how you handle them. And today, we're going to be talking about self-employed tax bases and why they're so expensive to be self-employed. What is an S Corp and how it helps you save money? Why start right now? How do you get started with an S Corp? And at the end of the slide deck, we will have a section for Q&As where you can ask me anything you want. Just a quick word about Collective. We are the first all-in-one online financial platform designed for self-employed people. Before Collective, when you're self-employed, you had to juggle several different things. Typically, you'd have to have a bookkeeper on one end. You'd have to have an accountant on one end. Sometimes you'd have to have separate services for invoicing, for contracts, for everything like that. But collective, as the name implies, we're a collective of all those services. We essentially handle everything for you. Here's your money when you're self-employed, okay? It's all over the place. You have business set up, you have estimated taxes, you have bookkeeping. There's a lot of things you have to juggle when you become self-employed. How do you feel when you need to make a financial decision? When you have all these things around in the ether and you don't really understand them, you feel kind of melancholy, to say the least, right? Here's how you feel when your money's at collective. All this hard stuff, all the complicated stuff, like the business taxes, business setup, bookkeeping, payroll, all of that is under collective. What are you struggling with most right now? That is a good question. And Sarah, I believe this is a poll question, if I'm not mistaken. Yes, we have a poll. So one is, what are you struggling with right now in terms of, your bookkeeping and your self-employed finances? And then we have a second one up here too. And are you thinking about switching to an S Corp? Has that entered your mind before this presentation? We'll give it a few minutes here. Let's see if I can guess. What are you struggling with most right now? I'm gonna guess bookkeeping. Let's see if I'm right. I could be completely wrong. Sometimes the answers to these questions surprise me. And what's interesting is a lot of times they're different from each webinar. All right. We'll give it a few more seconds here. And we'll see what happens. Okay, Sarah, you can go ahead and end it if that's possible. Oh, I was wrong. I was completely wrong. Okay, what people are most struggling with right now is how to set up your LLC or S Corp. All right, bookkeeping, I was extremely wrong. And then the second one is, are you thinking about switching to an S Corp? Half and half, yes, I'm in, and I'm still not sure. Well, hopefully by the end of this webinar, you'll be more sure and we can illuminate some of these things. All right, let's keep chugging here. Let's talk about some basics of self-employed federal taxes. So first, let's talk about tax structures. So businesses themselves, or certain type of businesses that you see here, don't pay any income tax. All the profits pass through to you, to your personal tax return, and you pay personal taxes on them. There are no double taxation like you have in a C corporation or anything like that. These are pass-through tax structures. On the top here, you have a sole proprietorship, which is essentially no tax structure. Your tax structure, your business structure is yourself. Everything's done under your social security number. Everything comes to your, typically through personal accounts. So that's a sole proprietorship. A partnership is essentially a multi-member LLC. It's when two or more people are on an LLC. That's another pass-through structure. Partnerships don't have any sort of business taxes. An LLC, specifically a single member LLC, when you're the only one on the business entity, that also is a pass-through entity. It goes straight to your personal return. An S Corp, by definition, is a pass-through entity. And we'll learn more about that later. Taxes self-employed people pay. Most painful part of the presentation, right? On one side of it, you have income taxes. And it's what most people think of when they hear the word taxes. It's marginal tax rates between 0 and 37%. And it's attributed to your adjusted gross income. That's where you pay income tax. Self-employment tax is a whole nother monster. It's a whole nother group of taxes, completely separate from the income tax. And it's another tax that self-employed people pay on top of the income tax. It's a flat tax rate, 15.3%. And literally what it is Social Security and Medicare taxes. That's what it is. That's what the self-employment tax rate literally is. And I'm getting ready to blow your mind. So listen closely. When you are a W-2 employee, when you work for someone else, when you're not self-employed, you still pay self-employment tax in effect because you pay Social Security and Medicare taxes. It's even the same tax rate. It's even 15.3%. It's the same tax rate that is applicable to your salary. But just by law, your employer pays half of that tax rate. They have to. Just straight off the top, they pay half of it. When you're self-employed, you pay both half. You pay the 7.65% paid by the employer. You pay the 7.65% paid by the employee. Because why? You are both the employee and employer. You're both. That's who you are. So, of course, you pay both halves of the self-employment tax. Why self-employment taxes are so expensive? Social Security and Medicare taxes. When you're an employee, and this example is assuming that you make around $100,000. When you're an employee, you only pay $7,500 of your Social Security and Medicare tax because your employer pays half. When you're self-employed, you pay the full $15K, the full 15.3%. Here is how you come to your net income. And your net income is simply just the total money you make, your revenue, by your tax deductions, which is just essentially another word for business expenses. And you get your net income. You are only taxed on your net income. You're not taxed on the total money that you bring in. You are only taxed on the money you bring in minus your expenses. There are some people think that there's a flat tax rate on every single dollar that you earn. That is not the case. And you might even have a loss. Let's say that you have $100,000 in revenue, but you have $110,000 in expenses. You now have a $10,000 loss, and you don't pay any taxes because you haven't made any money. The profit or the loss flows through to the owner's tax return, and that's where you actually pay taxes. The business profits is subject to the self-employment tax, 15.3%. And everything else, your income tax, your adjusted gross income after that is subject to the income tax as well. What is an S Corp? It's a good question, right? What is it? It's harder and easier than you think. It is simultaneously complicated and simple at the same time. And I'll explain why. Let's talk about legal structures first. It's important when you talk about an S Corp, it's always important to first start with legal structures. A legal structure, another word for it is a business entity. They're formed with your state of residence, typically, with the Secretary of State, the Secretary of State's office. They're generally required to file an annual report, just proving to the state that you're still in existence. Giving some updated information to the state. They typically will have you file an annual report. Sometimes it's biannual, every 2 years. There's certain states that only require one every 2 years, but typically they will require some sort of report. This is not a tax return. It doesn't have anything to do with your taxes. This is simply just an informational report to the state. The Secretary of State, the group that you handle your formation with, it's completely different from the taxing authorities, both the state taxing authorities and the federal taxing authorities, the IRS. It's its own thing. An S Corp is a tax election. It's not a business entity. It's not a legal structure. A lot of people think, quite understandably, of course, because it's literally in the name, they think an S corporation is a corporation, but it's not. That's not accurate. An S Corp is a tax election. So just by default, the IRS assigns every entity, every business entity, a certain tax structure. It's just a fancy way of saying that the IRS decides how each business structure is taxed. So single member LLCs are automatically taxed the same way as sole proprietorships. Your taxes don't change once you become a sole proprietorship and you go to an LLC. The only thing that changes is you obtain legal protection. You separate your personal assets from your business assets. And if you're ever sued under certain circumstances, if your business is ever sued under certain circumstances, typically your assets remain separate, and the people or organizations bringing the suit can't touch your personal assets. So that's the main benefit of an LLC. But that's a legal benefit. That's not a tax benefit. The tax benefit comes when you ask the IRS to tax your single member LLC under the rules of an S Corp. And that's a company like Collective would send in paperwork to the IRS and notify them that you would like your LLC to be taxed under the S Corp tax rules. What are the S Corp tax rules? Why are they so great? Why do we talk about them so much? Essentially, the main reason why you'd want to form an S Corp or make an S Corp tax election is to reduce the amount that you pay in self-employment tax, that annoying tax that I talked about earlier. S Corp owners don't pay self-employment tax on their business profit. There is a catch. What happens with an S Corp is, technically speaking, you become an employee of your own LLC. You remain the owner, of course. This is your LLC. It's your business. You remain on the company formation documents as the owner. But for tax purposes, you are now an employee. You literally are an employee of your own LLC. And since you're an employee, you pay yourself a wage. Your company literally pays you a paycheck, just like you receive if you work for someone else as a W-2 employee. That paycheck must be reasonable. It must be a reasonable amount for the amount of work that you do or for the type of work that you do. Payroll taxes, which is just another word for self-employment taxes, that 15.3%, that is only applicable, that is only applicable to your compensation, to your paycheck, to your W-2 salary. The rest is business profit, and the business profit isn't subject to the self-employment tax under the S Corp tax rules. Payroll taxes are 15.3%, just like self-employment taxes. They are self-employment taxes. Payroll taxes, self-employment taxes, employee taxes, I've heard them called that sometimes. They're all self-employment taxes. Half of the payroll taxes are withheld from your paycheck, and half of them are an expense for the S Corp as a business. This is what happens when you're a sole proprietorship. You have your revenue, your gross revenue, minus your business expenses or your tax deductions, and you come up with your net income. And let's say that it's a positive net income. That money is both subject to the self-employment tax and to the income tax. Here's how S Corps work. You have your revenue at the top, and that revenue, part of it is for the S Corp revenue. That's your salary comes out of the revenue, and the business expenses also come out of the revenue. The salary is subject to the payroll taxes. of 15.3%. Then, of course, you have your S Corp profit or loss, just like you do with an LLC. You either have positive money at the end of the year or you've spent more than you've made. And of course, once you have that S Corp profit or loss, it will flow through, like we mentioned earlier, to your personal tax return. That's how it works, both even if it's a loss or a gain or a net positive. Then, of course, it's subject to income tax as well. Here's an example of an LLC versus an S Corp. And more specifically, this is an example of an LLC and versus an LLC with an S Corp election. So let's look at the client payments with with a sole proprietorship or a single member LLC. They're taxed the same. So an example can work the same for both of them. Let's assume that clients pay them $160,000. You have some small expense write-offs of $5,000. You have some retirement contributions that essentially act as a business write-off. So here's the profit. Here's your total business profit before your wages, $145,000. As a sole proprietorship or an LLC, you can't pay yourself wages. You can only take owner's draws. So the full 145, sorry about that. The full 145,000, as you see here, is subject to the self-employment tax, the 15.3%. So the pass-through profit is 145 grand. Your total self-employment tax is $22,185. That right there is why it's so expensive to be a self-employed business owner. You pay more taxes. But as an S Corp, you have the same payments. You have the same client payments, 160 grand. You have the same expenses, the same retirement contribution. All your finances are the same. You end up with $145,000 in profit. But with an S Corp, you're allowed to pay yourself in W-2. And let's assume that you pay yourself $45,000 in W-2 earnings. Now, the self-employment tax is only subject to the $45,000, which instead of $22,000, that drops down to $6,000. That's a big difference, especially when you have dedicated most of your time to build your business. A difference of $15,000, that's a lot of business hours. That's a lot of hours of your life that you have literally given up. In my opinion, because you're doing that, you deserve to keep every single dollar that you're entitled to, especially if it's written straight into the tax code. Getting a salary through my S Corp is great, but how much do I pay myself? It's a great question. So here's some more information about reasonable compensation. There is no set standard for reasonable compensation. The IRS doesn't provide any sort of objective guidelines for it. So, it's a facts and circumstance argument. It's not anything objective. So a good tax professional has a logical method that allows you to come up with a reasonable salary. And that's something else that, Collective would assist you with, is when you come on board, we will not only run your payroll, but give you guidance on how much you should pay yourself. How does the money work? Well, first, you have your total business income, of course, and then you have your operating expenses, like marketing expenses. Maybe you are paying some contractors and you have those expenses. Maybe you have some subscription expenses like Collective or software, something like that. Those are your operating expenses. And then from there, we have your payroll, a flat salary that we'll advise you on. And the payroll, that will flow from your business bank account into your personal bank account, just like a check would. So weekly, monthly, biweekly, whatever is most convenient for you, that's how we can structure your paycheck. Your distributions, which is just another word for your S Corp profit. It's all the money outside of your salary. How you take a distribution is you simply transfer money from your business bank account to your personal bank account. You're done. You have taken a distribution. And you can do that throughout the year, anytime you want. And also, you have reimbursed expenses. It's expenses the S Corp pays for you that you have spent personally, but can still be attributed to business. So for example, let's say that you live at home. Well, obviously you live at home. Let's say that you'll work at home and you have, and in other words, when you work at home, you can take the home office deduction, and you can still do that with an S corporation. But the only thing is, with an S Corp, those personal expenses like your mortgage, your utilities, cell phone bill, all that kind of stuff, that will be showing up in your personal account. It won't be in your business account. So technically speaking, what happens is the S Corp will reimburse you for those personal expenses, and it's a write-off for the S Corp, but it's not taxed. It's not taxable income to you personally. So that's another sort of method that you can write off things with an S Corp. Which one is right for you? That's an important question to ask yourself when you're starting your business. How do I know if an S Corp is even right for me? Well, here's some general guidelines. If you're new to business with very little earnings, you have no idea how much you're going to make, an LLC is probably better to start with. If you earn less than 60 grand in profit per year, typically, an LLC is probably a good idea. Also, if you want a simple, straightforward tax structure that you can just whip up things in a flash, an LLC is the right choice for you. But let's say that you earn more than $60,000 in profit. Let's say your business is a little bit more substantial. Let's say that you want to maximize your retirement savings. You can do that spectacularly with an S Corp. And also, let's say that you have enough consistent cash flow to make payroll, to pay yourself a consistent payroll, then an S Corp might be right for you. Okay, and just one quick reminder, if you have any technical questions about taxes, things like that, put them in the Q&A box, and then at the end, I will answer them. And then if there's any logistical questions like audio issues or anything like that, put it in the chat box for me. Why start now? This is a good question. Why should you start, if it's advantageous for you, why should you start on this S Corp stuff now? Now is the best time to start because you can become an S Corp for 2023. That's why. Your taxes and bookkeeping will be simpler. The sooner we start, the easier taxes and bookkeeping are, because the sooner we have our hands on it and can assist you. You'll start the year with new money habits, of course. Getting started with an S Corp. First thing we do, of course, is set it up. And the first part in setting it up is creating an LLC. You have to be an LLC first to even be taxed as an S Corp. You can't be an S Corp by itself. So we're creating an LLC by filing the articles of organization with your state, the Secretary of State's office. File other states if required paperwork, excuse me. And then an operating agreement. We will craft that for you as well. And an operating agreement is essentially just, a legal document that kind of outlines how your business is run, the owners of the business, how much money they get paid, things like that. And then we'll make an S election for you after we have your LLC set up. We'll get an EIN number from the IRS. We'll file the S election paperwork, of course. We'll register for a payroll account and handle your payroll on an ongoing basis. Set up tools. We provide tools that you can use on your business when you're a collective member. Bookkeeping, that's one. We provide full service bookkeeping, but our bookkeeping software you can use yourself for other purposes, like invoicing or anything like that. Payroll software. We will handle your payroll on an ongoing basis, but also provide the software. So let's say that you have any contractors that you need to pay. You can use our software to do so. and set up money flows, of course. We'll get your business bank account set up, business credit card, all that good stuff. And then, of course, ongoing operations. What does that mean? You'll need to file business and personal tax returns, federal and state, when you do this. Payroll returns. You'll need to maintain the entity, meaning you'll have to, do your state paperwork, which is that annual report or biannual report, whichever. Keep up the books and tax obligations. That's something important. Maintain your books monthly, which is something else that Collective does, of course. And pay estimated taxes quarterly, both federal and state, if your state, of course, has state income taxes. And also ensure that you're calculating a reasonable wage and staying compliant with the feds, with the IRS. I think this is a poll question, but I think we already asked it, so I'll go ahead and skip this one. What it's like on your own without Collective. An S Corp is a lot of stuff. Don't get me wrong. Now, it can save you a lot of money. Of course, that's the positive aspect about it, right? But it can be more complicated when you switch from an LLC to an S Corp. You have to calculate your reasonable compensation. And if you do that wrong, that could increase your risk for audit, which is, not a good thing, especially now with the IRS receiving billions of dollars more in enforcement money. You have to deal with the complexities of your bookkeeping. Before you become an S Corp, you're not required to track a balance sheet. You are now with an S Corp. You have to deal with your payroll software. You have to figure out how that works. You have to worry about your state compliance. You have to set up your S Corp. Who knows how to do that, right? Here's your S Corp with Collective. We handle all that stuff. Setting it up, of course, running your books, running your payroll, giving you financial advice. With us, you're protected. Also, good news, we're available nationwide. We are in all 50 states. So whether you're shivering in Alaska or, have a rain jacket on in Seattle or have a sun umbrella in Florida, we got you. We can help you. We work with sole proprietors, single member LLCs, and LLCs already filing as S Corps. As of now, we don't work with corporations or multi-member LLCs. They're way more complicated when you make an S Corp election on those entities. And typically you'll need an attorney when you have something like that. And also, we only work with people with 60,000 plus in self-employment profits. Here's what you can expect when you come on board with us here at Collective. Here's your first year. Business setup, of course, which means form your LLC, whip up your operating agreement, get your EIN, get your S election, the registration with the state, reasonable compensation guidance. Just setting up the business is pretty cumbersome. Bookkeeping and payroll setup. We'll get your bookkeeping tools set up, we'll set up payroll, and we'll run your first payroll with you. Also, monthly bookkeeping and financial support. We provide ongoing support. We're a full service bookkeeping firm. So every single month, we'll categorize your transactions, reconcile all the accounts, and we'll review your financial statements. And we'll send you these financial statements every month, which means we close up the books every month. So we'll give you a profit and loss statement, a cash flow statement, and a balance sheet every month for your books. And then, of course, you have a team of financial experts that you can message with questions or for advice, anything you need. And of course, taxes. We'll file your quarterly payroll reports, estimated tax calculations, and annual tax preparation for your business return. Okay, here's the cost for all of this stuff. For an all-in-one package, Collective has one cost, and you have two ways to pay. If you go the month-to-month route, it's $299 a month at will contract, and quite frankly, that's a pretty reasonable price, especially since just bookkeeping alone, a lot of bookkeepers charge $300 for only bookkeeping. Collective is doing it all in one bucket. You have another option. If you don't want to go the month-to-month route and you'd like to go ahead and pay in full for a year, you save 15%. So that comes out to about $3,050 a year. There are no setup fee. Let's say that you're a sole proprietorship. There are no setup fee for sole proprietorships. You just pay the monthly or yearly price. But if you're an LLC or you're an LLC with an S Corp election, there is a one-time $399 onboarding fee. And the reason we charge that is because when you first come on board, especially when you have an existing business entity, it takes hours and hours for us to make sure that it was set up correctly, that your S Corp election was done correctly. That's really important to do right at the get-go to make sure that you remain safe. And of course, it includes monthly bookkeeping and bookkeeping tools. And everyone likes to hear this. Collective is a business expense, which means that it is tax deductible. You can write it off as a business expense. Also, too, schedule a call with us. Schedule a free call with a tax advisor. Come with the code. Of course, we're offering a special code to where if you give it to us, you get your first month half off. And of course, this is how you sign up with Collective. But also, this is no pressure. This call is to make sure that you're a good fit. That Collective is a good fit for you. That it's a good fit for your business. If it isn't, a tax advisor won't sign you up. We'll give you advice and we'll say, hey, I don't think Collective would be the best place for you. Here's some referrals that you could go to get your taxes handled. But if not, if it is, we can talk about next steps and how it works with Collective and what the process is like. You can go to that link right there to schedule a call. You can use the QR code, but you can also go to our website and schedule a call there. Okay, well, usually I'd have a Q&A page, but I think that's missing here. So now is time for questions and answers. And let's get to it. All right. First question. Does Collective manage payroll and benefits? Absolutely. We have, and also, if you guys don't mind, put your technical questions in the Q&A box. It'll present it to everyone. It'll be easier to answer. But absolutely, we manage your payroll and your benefits. That will be done. We use a payroll processor called Gusto, and that's where your payroll is handled and your benefits. Question is around liability. Professional services offering liability of 1 to 3 million, even with an E&O insurance to cover. Personally, I am not liable with an S Corp. I'm not really sure how to answer that question, to be honest with you. How does this apply to a foreign LLC? Well, typically with an S Corp, you have to meet the substantial presence test. You have to have non-citizens typically can't become S Corps. So that's one thing that's important. Typically, S Corps are an American LLC, and if someone passes a substantial presence test, has a green card, or is a naturalized citizen. The rules are a little bit complicated on that. Will there be a recording of this we can access? I have a meeting starting shortly. Absolutely. This recording of this webinar will be sent to you via email in 24 hours. Can you change from an LLC to an S Corp anytime? Technically, yes, you can if certain parameters are met. Do you have tax attorneys and CPAs on staff? We absolutely do. Deborah has a great question. What would be the reason for the $60,000 threshold for switching to be taxed as an S Corp? That's such a good question. So, as I mentioned earlier, Collective's cost is $299 a month if you choose to go that route. But if you pay in full for a year, it comes out to about $3,000. Generally speaking, when someone becomes an S Corp and they're making $60,000 a year in income, they are generally saving around $4,000 to $5,000 in the self-employment tax. So if collective's fee per year comes out to about $3,000, and at 60K, you're saving around 4 to 5 with an S Corp, then that's when it's worth it, right? And that's a way to protect you, because we only want to bring on members who we can impact positively. We don't want to sell you a service that's not going to save you money. So that 60 grand threshold is just us being honest and saying, hey, I wouldn't join collective before that 60 grand because you're not going to save a lot of money. Hi, Amy. I'm having a lot of interruptions. Are you doing this seminar again anytime soon? Yes, you'll get a video of this presentation sent to you. So hopefully that'll fix it. Stephanie, that's a good question. What if I'm just starting out as a consultant and am making less than $60,000? So an LLC seems better based on your slide, but I anticipate making more money as time goes on, I hope. Can you ever switch when you make more money? Well, what I would do is, if you're sure, here's how I would answer that. Think about when it's worth it to become an S Corp in the next 12 months. Don't think about it at an annual basis. Like, don't think about it, how much money will I make, for the rest of this year? Think about how much money you'll make in the next 12 months. So from August 2023 to August 2024. If you expect to at least make $60,000 in that 12-month time period, then I'd go ahead and do it right now. Even if you're not currently making that amount, if you expect to make that amount, it's worth it to switch. Now, you can switch later on if you'd like, but it's a little bit more complicated. The longer you wait in the year, the more complicated it becomes to do your S Corp. So what I would say is, if you solidly anticipate making more money as time goes on, then I'd say go ahead and get started with an S Corp. Rebecca, another good question. What are the costs associated with creating and maintaining an S Corp? Well, first, the only cost associated with creating the S Corp is the LLC cost that you have with the state, the LLC registration fee that the state charges. So technically, it's not even really an S Corp cost, but you have to be an LLC before you can even become an S Corp. So really, the cost associated with it is the LLC cost, but there is no additional cost to actually make an S Corp election. There's nothing like that. And really, maintaining an S Corp, the only thing I think that the additional cost that you can consider when maintaining an S Corp is your payroll software. Because before you become an S Corp, you're not paying yourself a paycheck. So you typically don't need a payroll software. So that's a cost that you can expect to pick up. But thankfully, if you come on board with Collective, those costs for your tools, like your payroll software, your bookkeeping software, that's all under the $299 that you pay to Collective. Jackie has a question. I am a speech language pathologist in California. I am unable to become an LLC. So does that mean I am unable to become an S Corp? No, you're likely still able to become an S Corp. And Jackie, it sounds like to me that if you're not able to become an LLC in California, then they probably want you to become a PLLC in California. A PLLC is a professional limited liability company. Or they might want you to become a PC, which is a professional corporation. Both of those, and that's just because California requires certain licensed professionals to set up these sort of special business entities. But the good thing is that a PLLC or a professional corporation, they can typically elect S Corp tax status too. So it sounds like to me that you can still become an S Corp. How does QBI, the qualified business deduction, alter your S Corp versus LLC tax estimates? Honestly, it's a case-by-case basis. The QBI, which is just an automatic business sort of income deduction, can affect the S Corp tax savings, but it's honestly, it's too hard to kind of go through on a form like this. schedule a call with Collective and we'll go into it deeper. What if you're already an established single member LLC? How do you switch to become an S Corp? We would file paperwork with the IRS and ask them to have your current single member LLC to be taxed as an S Corp. So you're fine. I'm not sure that I'll make more than 60 grand in a year. And I do currently have an LLC as a sole proprietorship. I've always just filed yearly with my personal taxes. Should I switch to quarterly? I mean, it's usually a good idea if you pay your taxes quarterly. A lot of times they will penalize you if you're a self-employed business owner and you don't pay quarterly taxes. A lot of times they'll penalize you. And I'd be surprised if you haven't gotten penalized a little bit. It's probably not anything huge, but why pay more money to the government if you don't have to? So I would, you don't have to file quarterly. You're still filing your taxes at the end of the year, but just start paying your taxes quarterly. Travis asked, what bookkeeping software do we use? We use a software called Xero, Xero. It's a lot like QuickBooks, but we like them a little better. We think they're high tech and easier to use. When do you expect to be able to provide support to multi-member LLCs? Pedro, that's a hard question to answer. To be honest with you, I'm not really sure. Now, in the future, sure. I do expect us to eventually be able to support multi-member LLCs, but just not right now. And I can't really give you a time frame because I'm just not sure. But the reason that we don't is because that's a partnership. A multi-member LLC is a partnership. And they're a lot more complicated to handle when it comes to an S Corp election. It'd be really hard for us to handle partnerships for $299 a month. So right now, we've just set up our model to where we can still charge that type of price. But in the future, I guarantee you that we will open our offerings. So, please just stick around, stay in touch, and stay on our email list, and we'll keep you informed. How long before this recording is sent to us? It should take about 24 hours. If you started an S Corp but missed setting up a payroll for owner compensation, can you issue a 1099 NEC to make up for the first year of operation? Nope, you can't really do that because that's not a W-2. That's not. If you miss setting up payroll, then you would probably need to amend your tax return, and I would speak to a CPA or a tax attorney about that. Are employees of Collective contract or are they actual employees of Collective? They are actual employees of Collective. They're W-2 employees. When you say set up the S Corp, but I already have an LLC, what more is there to do other than file the form to the IRS? A lot more. So when you file that form, there's a few things that you have to put on it. And one of the things that you put on it is the S Corp election date. So you currently have your LLC, but we'll be able to backdate your S Corp election for a month or so until July. So when we do that, we'll send in the paperwork, which needs to be examined by a professional anyway. I can't tell you how many times that someone has sent in, S Corp paperwork, and there's something wrong for it. Something wrong with it. The IRS disagrees with it, and they have to wait a year before they can become an S Corp again. I know it seems simple, but it's really not. But when we make an S Corp election, since you're currently an LLC, we have to go back and clean up your books. We have to go back and include a balance sheet because you don't have that with an LLC, but you do with an S Corp. We have to go back and run back payroll. This takes tens and tens of hours. It's extremely work intensive. What retirement accounts options does Collective handle or offer? I'm thinking about opening a solo 401k. So how that would work is you would actually open that yourself with a company like Fidelity or Charles Schwab, something like that. And then we'd handle the bookkeeping and financial aspects of your retirement account. Are distributions taxed if transferred from your business to your personal account? They're taxed anyway. So your distributions are not subject to the self-employment tax, but they're still subject to income taxes. So district, and they're subject to that income tax regardless if you actually transfer it to your personal account or not. If you have distributions, if you have money within a year, a tax year that you've made, and it's in the S Corp bank account, it's still subject to income tax. If you're setting up an S Corp without being an LLC first, how do your taxes work if you're not making any profits yet? You can't set up an S Corp without being an LLC first. You have to be an LLC first to make the S Corp election. I moved from, I think, Alabama. I'm kind of embarrassed. I moved from Alabama to Washington last year. My business is an LLC in Alabama. Should I dissolve it in Alabama and create an S Corp in Washington? Honestly, this is really, unfortunately, Ryan, this is really complicated. Now, usually it's easier to just dissolve, if you're moving states, just to dissolve an LLC in one state and create another LLC to the state you're moving to. Typically, that is easier. But there are certain specific situations to where it might be better for you to foreign register your LLC in Alabama to Washington. There's foreign registrations. There's also dissolutions too, to where there's a process to where you shut down the LLC in Alabama, but then Washington accepts it and transfers it over to Washington. It's extremely complicated. And I would talk more to a business attorney about that. And what I would do is maybe even go to rocketlawyer.com, a place like that, find a business attorney and just get some general advice on what to do there. What forms do I have to file to start filing as an S Corp? It's form 2553. That's the S Corp form that you send in on your LLC. I am a new startup, currently a sole proprietorship. Do you have to net $60,000 first? No, you don't actually have to make $60,000 first before joining Collective, before becoming an S Corp. You just have to expect to make a, you just have to expect to make $60,000 in at least the next 12 months. And then it's worth it to become an S Corp. Is there a legal contract generator on Collective? No, we don't have a contract generator. What is the difference in being an LLC and filing as an S Corp, tax entity, versus being an S Corp and filing? Would that be the same tax savings amount essentially? Well, you can't be an S Corp by yourself. So you can be essentially two business entities that elect S Corp tax status. You can be an LLC that elects to be an S Corp, or you can be a corporation that elects to be an S Corp. The tax situations of those two are the same, absolutely. Making that S Corp election creates a certain tax situation to where those two situations would be the same tax-wise. But legally speaking, it would not be the same. Because the differences between an LLC, there are differences between an LLC and a corporation, even when you make an S Corp election. With a corporation, you have additional requirements that you got to keep up with. You have to have a board of directors. You have to conduct and record board meetings. You have to record meeting minutes. A corporation has a lot more administrative burdens than an LLC does. The only reason why you'd want to be a corporation is if you ever wanted to go public, is if you ever wanted to issue stock in yourself, things like that. That doesn't apply to a vast majority of small business owners. So a vast majority of them need LLCs as opposed to corporations. And the good thing about it too is that corporations don't provide any additional legal protection. It doesn't give you any more legal meat than an LLC does. An LLC will protect you just as much as a corporation. The corporation is only there as if you ever wanted to go public, but that typically won't apply to you. What if you want to start as a fictitious name with an EIN? You can. That's another word for a sole proprietorship. If you're a sole proprietorship and you set up a DBA, which is just a name for your business, a registered name for your business, that's a sole proprietorship. And you can get an EIN with a sole proprietorship, but just having a DBA doesn't allow you to elect S Corp tax status. You have to have an LLC. What is the best route? What is the best route if I'm just starting out as a consultant and only have a couple really small clients right now? Not sure when I will have more. Is sole proprietorship better at this stage? Honestly, no, Stephanie. I would go ahead and set up an LLC. Now, if you only have a couple of really small clients right now, then I probably wouldn't worry about S Corps or anything like that, like if you're not making above the 60 grand yet. But I'd certainly go ahead and set up an LLC. Here's why. Let's say that you have an LLC in place and you're making money. And let's say that in a few months, you start making a lot more money. Like you'll think, within the next 12 months, you'll reach 60 grand. You could come to Collective. And since you currently have an LLC in existence, then we can backdate the S Corp election. We can backdate it till July of this year, July 1st of this year. But we can only backdate your S Corp when you have an existing LLC. So usually it's a good idea when you start doing business, just in general, set up an LLC. Kelly has a good question. Assuming S Corp income taxes would no longer be filed on your Schedule C of your personal taxes, do self-employment taxes change forms as well? You will have a few different forms. So this is generally how it'll work. So what'll happen is at the end of the year, by March 15th, that's when it's due, Collective will file your S Corp tax return, which is just a word for it is an 1120S. Your personal tax return, it's called a 1040, of course, but your S Corp tax return is called an 1120S. And when we file that tax return, we'll issue what's called a K1, which is really just it's a form for your business. It shows how much salary you were paid, how much distributions you were paid, or how much distributions are in your account. It's essentially a W-2 form for your business. And you take that K1 and you plug those numbers in on your personal tax return. But you're certainly correct. You will no longer have a Schedule C. I have a 9 to 5 job. And in addition, I have an LLC with a partner and one S Corp with no partners, just 4 employees. And I'm the only owner. And another S Corp with 2 more partners. Can we combine all of these and can we form a holding company? Also, can I pay through payroll to my children? You can. Holding companies can be advantageous in certain situations. I'm not really sure about a holding company because you have partners. Typically holding, and by the way, Collective can't handle holding companies, but I'll speak to them anyway. Holding companies are typically if you yourself have multiple businesses. They're typically not used if you have multiple businesses with other people that are involved. A holding company is, let's say that you have multiple single member LLCs. Let's say you have a dry cleaner for one business. Let's say that you have a personal training business on the other, or whatever. Usually, you'll set up a holding company, and you'll have LLCs underneath them, and the money from those LLCs will funnel to the holding company, and the holding company will act as a sort of management company for these LLCs. But the good thing about it is if you ever get sued or anything like that, typically they can only sue your individual LLCs, which won't have much money in them because it's funneling that money to the holding company. So it's a way to kind of provide additional legal protection. It's a way to kind of shelter, certain levels of income from legality. And also, can I pay through payroll to my children? I'd be careful about that because here's the thing. There are several things that you can do with the IRS, but the question is, should you do? Should I pay my children? And usually the answer is no, to be honest with you. A majority of the time when people are thinking about paying their children, they think that it's just this sort of financial trick that you do, and it's just, advantageous because, oh, I'm just going to put my children on the payroll, I'm just going to pay them, that's totally legal, right? You can only do that if your children are actively working in your business consistently, to where you can prove it, to where if the IRS came to you and wanted verification for this, you would say, oh, hey, here are their timesheets, here's their work product, here's what they've done. If you don't have any of that, then you could get audited. I want to set up two businesses. Can they both be under the same S Corp? Well, it depends. I mean, if they're two completely separately unrelated businesses, then it's usually a good idea to put them under different LLCs, to put them under separate LLCs and separate LLCs and separate S Corp elections, because they're too different. And the problem is the IRS has what they call business activity codes. And an activity code is just business activity of a certain industry. So the problem is, though, when you have two unrelated businesses under one entity, the IRS has a right to disallow the business expenses from the unrelated business entity. So if they're two completely separate businesses, I'd keep them separate. Now, let's say that you have one business and you have kind of different income streams that you maybe set up different DBAs for. Like, for example, let's say that you have I don't know, let's say that you have a traveling masseuse business. Let's say that you have a van and you go to people's houses to give them massages. And let's say that along with that business, you also have, a lotion line. You make your own lotions, you scent your own lotions, and you want your lotion, it's connected to your personal training business, but you'd also like to set up a DBA and kind of make it its own sort of brand. That may be possible to put under one LLC and have one S Corp election because they're related. And there's more of an argument to be made. This lotion is just a part of my personal training business. If I have a food truck, would changing to an S Corp benefit me more? Completely depends. It depends on how much money you're making. If you're making over 60 grand, then it very well might. We are a multi-member LLC taxed as individuals, I believe. I believe we meet that threshold. What benefits do you have for your employees? Well, unfortunately, we don't handle multi-member LLCs. That's a partnership. You need to go to a CPA or probably a tax attorney. I've heard that my state in Tennessee is not good for corporations due to double taxation. I know nothing about taxes. Is this true? Well, generally just for corporations, regardless, let's say that you just set up a corporation and you don't do an S Corp election, then that is double taxation anywhere. It doesn't matter what state you're in, you'll be doubly taxed, both at the corporate level and then again at the personal level, at the investor level. But also, there are certain states that have S Corp taxes specifically, unfortunately. They just charge S Corps that. Tennessee is one. New York is another one. So really, it just depends on your personal financial situation. And it would need to be looked at personally. So I would encourage you to schedule a call with one of our advisors, and we'll kind of go through it a little bit more deeply. But to answer your question, yes, there are certain states out there that S Corps are a little bit less advantageous because they have extra taxes for them. Regarding the IRS criteria to calculate your wage in order to reduce your profit in an S Corp, can you talk about this criteria? Great question, Patricio. So there really isn't an objective criteria. That's what's so frustrating about this. It's a facts and circumstance test. The only thing that the IRS says about it is that it has to be a reasonable salary. That's it. So a good tax professional will come up with their own method to calculate a reasonable salary for you. And that usually involves taking into consideration how much money you make in total, How many years of experience do you have in your business? What area of the country do you live in? What are similar professionals in your industry? What are they making? So taking all of those characteristics into consideration, a tax professional will come up with a method. And let's say that you're ever audited, or there's ever a question that comes up from the IRS later on. It's a lot better defense in an audit when you can tell an auditor, I was just relying on the advice of my, my professional. So, don't blame me. Usually auditors are a lot more, understanding when someone has taken the steps to go through a tax professional. How many employees does the included payroll processing cover? Well, you'll be the only employee, Travis. So technically, you'll be the only one. But if you're talking about how many contractors you can pay on our payroll processor, I believe it's 5. There's a limit of 5 contractors. When paying quarterly estimated taxes and having an S Corp, are you paying them based on the S Corp's anticipated profit? Yes, you are, Abigail. It's another really good question. You are. Your S Corp is just another word for your business. It's another word for your LLC, really. And whatever your LLC/S Corp makes, that's what you need to pay your estimated tax deposits on. Well, let me clarify a little bit. Your S Corp net income. So let's say that you expect to make 100 grand throughout the year, but you also expect to have $20,000 in expenses too. You'll pay estimated tax deposits based on $80,000 instead of $100,000. Does Collective set up PLLCs like they do LLCs? Unfortunately, no, we don't. You need to go to a tax attorney for something like that. I have 2 DBAs under my LLC as the owner of both using the same EIN number. Can I turn them all as S Corp? Yes, because technically, Lewis, you have one business. Even though you have 2 DBAs, you technically only have one business. You have one LLC, and that LLC can make an S Corp election. Great question, though. But yes, you can. You can turn that into an S Corp. Does the membership include filing your taxes? It includes filing your S Corp tax return. It doesn't include filing your personal return. Now, the S Corp tax return is the 1120S. And by becoming and here's the positive thing about that too. By becoming an S Corp, your personal return will actually become much more simpler. Because before you were an S Corp, if you were a sole proprietorship or an LLC, all of that information went on your personal tax return, on your Schedule C. So your personal return was harder. It was a lot more complicated. But now all that information, all your business information will go on your S Corp tax return. And that's the one that we're going to be handling. It's going to be a lot harder than your personal return. And then when we file your S Corp tax return, we'll issue what's called a K1. And you take that K1 and you plug and chug the numbers on a software like TaxFile or TurboTax, and you file your personal return in 10 minutes. It's pretty easy to do. I have some 1099 income that is being incorrectly paid to me directly instead of to my LLC/S Corp. How do I get these included with my S Corp for business and tax purposes? Honestly, I believe that you can just include those in with your S Corp books. Now, the important thing is, though, is that to fix the 1099 as soon as you can. So what you would need to do is whoever is sending you those 1099s, give them a new I-9 form. And an I-9 form is just a new form saying, hey, start paying this bank account, start paying this LLC instead of my 1099, instead of my under my social security number. But even still, I think that you can go ahead and include the payments that you've already made into your S Corp books. It's just important that long term to fix those sort of reporting requirements so you don't run into any problems with the IRS. I'm willing to buy FedEx route, and it's requiring me to be an S Corp or a C Corp. So should I register my entity as an LLC, then change to an S Corp? in a vast majority, if they allow you to do that, then absolutely, that's what I would do. An LLC is more beneficial to a C Corp. It's easier to run. A C Corp, you don't really need to have all those other administrative requirements. You don't need a board of directors. If you're not going public, you don't need any of that. So generally speaking, I'd probably register it as an LLC and then make an S Corp election. I work from home. Can I expense my home mortgage? And if so, what part of the home mortgage? Such a good question. So what you can do is you can expense the interest part of your home mortgage, but you can only expense a part of that interest. So this is how you do. You calculate the total square footage of your house. And let's say that that's 1,000 square foot. And you then calculate the square footage of your business office. And just for this example, let's assume that that's 300 square foot. You would then take 300, divide it by 1,000, and you'd come up with 30%. You would take that percentage rate, that 30%, and you'd apply it to personal expenses that can be applicable to business. So for example, let's say that you have $400 in mortgage interest per month. You can write off 30% of that $400. So what is that? That's $120 that you can write off each month from your business. Also, you can write off your cell phone bill. Let's say that your cell phone bill is $100. You can write off $30 of that $100. You can write off your HOA fees. You can write off your house cleaning fees if you have those. You can use that method to write off all kinds of things. Does an S Corp election have to apply for the entire calendar year for taxation purposes? Or can you change the election mid-year and therefore have a mix of tax treatments in the course after a single year? Abigail, you can absolutely do that. And what would happen is, let's say that you changed, mid-year. The first part of the year, you would be a sole proprietorship, or you'd be an LLC. And all of that money from January until July would go on your Schedule C of your personal tax return. And then all of your income and all of your money from July until the end of the year, then that would be under the S Corp tax rules. And you'd have an S Corp tax return. You'd have a K-1 that. So absolutely, you'd have a mix of tax treatments at the end of the year. So can I say sole prop 1099? I'm not really sure what that means. Can I get an EIN for my sole proprietorship? Yes, you can. You can just go out and apply for an EIN number as a sole proprietorship. Absolutely. We have created a single LLC for our rental investment, and I'm the property manager. So I don't get salary since it flows through our personal tax return. Me and my husband have other W-2 income. Do you think we should convert our single LLC to an S Corp and get a salary as a property manager? I wouldn't do that. I wouldn't do that, because here's the thing. So it's you and your husband that own this property, and you manage it. I wouldn't do that, because here's the thing. When you have passive investments like rental properties, stocks and bonds, there's other investments like that, they are not subject to the self-employment tax. So you shouldn't be paying self-employment tax on the money that you get from tenants. So, and the only reason why you'd want to make an S Corp election is to save on the self-employment tax. So typically speaking, rental properties, LLCs for rental properties won't make an S Corp election because there's no self-employment tax for them to save. So no, I would, and again, I'd have to look into it a little bit more to give you a complete objective answer. But just generally, if you have a rental investment, a passive investment, it does not need to be under an LLC. It does not need to be under an S Corp, excuse me. I was a W-2 employee for the first half of this year and made a significant amount of money at that job. Will the S Corp self-employment tax savings still be a benefit this year if I already maxed out my Social Security payments through that job? You are so smart, Abigail. That's a great question. So what Abigail's saying is that with the Social Security and Medicare tax, the 15.3%, it's made up of Social Security and Medicare taxes. I just said that. But the Social Security portion of that 15.3% is significantly higher than the Medicare portion. The Social Security portion is like 12 point something percent. And then the Medicare portion is around 3%. So it's not proportional. The Social Security portion, as Abigail mentioned, max out, and it maxes out at $160,000. Meaning, if you make more money outside of that income source, outside of that 160 grand, it will not be subject to the Social Security portion, that 13% at all. It'll only be subject to the Medicare portion, the 3%. So let's say that you have a super high W-2 job, and you've already made way more money past the 160 grand. Becoming an S Corp on your self-employment income, separate from that, that will have an effect on your S Corp tax savings, absolutely. And that's why we do the calls before you even join Collective, before you even become an S Corp. And we determine whether or not, we ask questions like that. Do you have a W-2 job? How much money do you make in that job? Because that you do need to take that in consideration when becoming an S Corp. So for example, let's do a quick calculation here. Let's say that you make $160,000 in a W-2 job, and you have $100,000 on the side in a self-employment job. Since you've already hit that max of the Social Security portion, let's say that you're an S Corp from your side business. Let's say you make 100 grand, and let's say that you pay yourself $40,000. Without that and you have $40,000 and you have $60,000 left in distributions. Distributions is what you are saving on the self-employment tax on. You don't pay the self-employment tax on the distribution. But instead of now, since you've hit that cap, instead of on your W-2 job, instead of saving 15.3% on your distributions on that $60,000, you're now saving 3%. Because you're only saving the Medicare portion. You've already capped out on the Social Security portion. So your savings go from, I don't know, what is that? Around what? $7,000, and it goes down to, under $1,500, so that's a big difference. So it's definitely something to keep in mind. On business cards, can I say sole proprietorship? When I write in contrast, most ask for an EIN number. Absolutely. If most of your contracts are asking for an EIN number, it's probably a good idea to go get an EIN number, and you can do that as a sole proprietorship. Mortgage question. If you run the business from your home, can you claim the full mortgage expense? No. You can only claim the portion of your home that you're using for business. If you have a personal residence, it necessarily means that you're not using it for business 100% because you're sleeping there, you're eating there, you're doing things that have nothing to do with business. So you only can write off the portion of the area of your house that you actually use for business. I have a dog breeding business and a wealth management business I run from my home. How can I claim my mortgage for one and my virtual office for the other as expenses? Well, what I would do, it depends. I mean, let's say that if you have a dog breeding business and a wealth management business, let's say that you breed dogs in your garage or a certain area of your home, and then you do your wealth management from some other home office. You would just add up the total of those square footage of your home and come up with your home office deduction. So, it's just whatever is attributed to the dog breeding business, whatever square footage that is, that's how much you write off for that business. And whatever square footage the wealth management is, that's how much you write off for the wealth management business. if I have a job getting W-2 and I have a mortgage payment and my business is an S Corp, in this case, can I add mortgage interest as an expenses? And how is my W-2 treated? If you work from home, you can have your mortgage interest as expenses. Yes, you can. It wouldn't really affect your W-2 job. How are estimated payments handled when profitability is highly volatile month or even year to year? A situation where you won't really have a clear idea of profit until November. Is it possible to not make estimated payments and pay all the payroll to yourself at the end of the year when you have an idea of how much profit there is and therefore a better idea of what is reasonable? That's an excellent question. So it doesn't, with estimated payments, it doesn't really matter when you make your money. Is if you expect to owe at least $1,000 in taxes for a certain tax year, it's important to make quarterly estimated payments, even if you're not completely sure how much money you're going to end up with. So making estimated tax payments, unfortunately, you just have to do the best you can with your estimations that you have of your income and make these payments. Now, you can, in certain situations, you can wait to run payroll later. It's the amount of payroll you run that's the most important. It has to be a reasonable amount. Now, it's usually better to run payroll on a consistent basis. It looks better to the IRS. If you were ever involved in an audit, it looks better. But sometimes if you can't do that, then you can't. If you don't have money coming in through a certain time period, you can't run payroll because there's no money in the business account to pay yourself payroll. So if you make most of your profit at the end of the year, that's when you pay yourself a salary. It's the end of the year. Is there any reason I should wait to file for my LLC S Corp if I'm not planning to immediately open business, other than the con of paying for the LLC annual fee earlier than necessary? At what point in the business planning process should the LLC be established? Honestly, it's kind of a hard question to answer, because what I want to do is say it's usually a good idea that as soon as you just start having general sort of mechanisms happening for the business, you're starting the business in a small way, it's usually a good idea to go ahead and open up an LLC just for convenience purposes. Just open up an LLC, get an EIN number, get a business bank account, and start, just so you can have it ready. But also, LLCs become less important in certain situations. One, if you don't expect to become an S Corp this year, or don't want to become an S Corp this year, then an LLC is less important, because if you don't plan to make an S Corp election, there's no reason to have an LLC, something like that. Also, if you're not in a very litigious industry, like let's say that you're an online coach, or a fashion designer, things like that. Typically, they don't have a large exposure for you being sued and for other legality issues like that. So an LLC is less important. So those are a few things to take into consideration. Generally speaking, I'd say to go ahead and set up an LLC, but there are some states where LLCs can be a little bit expensive. One, in California, there's an $800 entity tax every year with an LLC in California. So if you don't expect to make a lot of money for a certain time period, it might be beneficial to wait on the LLC. It just kind of has to do with your personal situation. I own 7 LLCs in real estate and service-related businesses under the roof, along with tenants. Should I go S Corp route currently? It's a pass-through into my personal taxes. Well, your service-related businesses, that may or may not need to be an S Corp route, but your LLC, your real estate LLCs don't need to be. If it's passive income, it's not subject to the self-employment tax. If my business activity is in a different state than I live, which is better to register my entity, in my living state, the business activity state? Such a good question. It's where you live. Now, with our electronic world, we do business with people all over the country. So, you might live in Missouri, but most of the business you do are people living in California, in Florida or something like that. Still, technically your business is in Missouri because you are the business and you're in Missouri. Doesn't matter that you're doing things for other people outside of states. If you're in Missouri, that's what your LLC should be. Can you talk about the 5-year ramifications of electing S Corp for taxes? My understanding is that you are trapped into the structure for 5 whole years. Is there any workaround? You're not trapped into the structure for 5 years. You're not trapped into the structure. But still, it's a great question, because where the 5 years come into play is, let's say that you have an LLC and you elect S Corp tax status on that LLC. But then let's say you revoke your S Corp election to where you don't want to be an S Corp and you revoke it. You can't re-elect to become an S Corp on that same LLC for another 5 years. So really, you'd be stuck as a sole proprietorship LLC. So, think really hard before you like end an S election, because you can't elect another one for another 5 years. So that's where the 5-year time frame comes into play. Now, kind of a workaround around that is, if you're okay with it, you can always set up another LLC, a separate LLC, and just kind of start another business entity, and then you can make an S Corp election on that one. But you can't make another election on the same LLC for another 5 years. Okay, that's all the questions in the chat box, but I believe that in the Q&A box, but I believe that we have some other questions too. Once you establish as a sole proprietorship S Corp, is it difficult to split ownership at a later date? It shouldn't be any more difficult than any other business entity. Okay, how can I write off my rent as a tax deduction? The same way that you write off your mortgage interest. You take the home office deduction percentage that we calculated earlier, and you just apply it to your rent. Okay. And I believe there's some more questions here. Okay. Do we need to have an LLC set up already, or could you do that for us? We could certainly do that for you. That's part of our services. We'll set up an LLC for you. What tax softwares do you use aside from Gusto? We use Xero for your accounting. What is the minimum base annual income? And when you think someone should join Collective? $60,000. $60,000 in a 12-month time period. We are already set up as an S Corp, but we are not making $60,000 yet, but plan to be in the next 2 years. Can we qualify for this support? Will the support and prices differ? You can go ahead and schedule a conversation with us, because really the only reason why we put that $60,000 threshold is because typically below $60,000, you won't save in an S Corp above our fee, but you can still have all the support of your bookkeeping, your tax filings, your payroll, things like that. You may not save a lot of money, but you'll still have everything handled. So it can absolutely still be beneficial to join Collective. Adam, that's a great question. It's 60,000 net, 60,000 net income, not gross. It's 60,000 after your business expenses. That's when it becomes worth it. Really good question, Adam. I already have a PLLC. Would Collective work with PLLCs to file it as an S Corp? Unfortunately not. Do we just put our email to get the recording sent to our email? I believe when you registered for this webinar, you had to enter in your email. So I think we already have it on file. Do you have suggestions on what to do with business profit outside of payroll? What are ways to invest business income? Would I open up a business investment account for stocks outside of my personal? Well, keep this with take this with a grain of salt, because I'm not a financial planner. I'm not an investment advisor. But you don't really have to have a separate business account for passive investments. So let's say you pay yourself, distributions, you pay that into your personal account, and then you simply just buy stock and bonds and investments in brokerage accounts like Fidelity or things like that. But you typically don't need another account to invest. And another good way to invest business income is to save for self-employment retirement, something like a solo 401k or a SEP IRA. I've seen people put back, up to $63,000 in tax-free retirement savings. Do you plan to support more complex tax situations in the future, like someone who's a digital nomad with a US-based S Corp? Absolutely. I mean, like we're always growing and expanding our services. It's just a matter of when we do so. So stay in touch and we'll keep you informed. Oh, another good question. Is the suggested $60,000 threshold regarding working with collective specifically or registering for an S Corp at all? It is specifically a collective number. Theoretically speaking, you can register as an S Corp if you have a loss. Let's say your business is losing $10,000 every year. You can still file as an S Corp. It's no problem. It's just that collective specifically puts that $60,000 threshold on there because taken into consideration with our fee, how much you'll save with an S Corp at that income level should be above how much you pay us to run your taxes. So that's the only reason why we put that $60,000 threshold. Okay, and I believe we got through all of the questions. Thank you, Ryan, for the kind words. I'm glad you enjoyed this webinar. And you're welcome also, Stephanie. And I hope that everyone else enjoyed it as well. And like I said earlier, we will be sending out a recording. If you missed any part of this, we'll send out a recording to the email that you registered with the webinar for this entire conversation. So you don't have to worry about that. And, like I mentioned earlier, I would advise you to schedule a call with us and we'll talk, more about your situation. We'll go more in depth and we'll determine whether or not you even need to be an S Corp. The answer might be no. And if the answer is no, we'll certainly point you in the right direction. But if the answer is yes, we can talk about next steps and we can talk about how we can get you on the journey to sweet, sweet tax savings. But that is all the time that I have today. I actually have a call with a prospective collective member. Please don't forget, you have a sweet, sweet discount code here if you'd like to get some savings when signing up. But it was a pleasure, as always. One of my favorite things to do is talk to self-employed individuals like yourself. So good luck to everyone. Keep killing it in your business, and I will speak to you very soon.